Good morning, traders. This is Rose. Today is Monday, April 22nd, 9 a.m. Eastern Time. Kickstarting the trading week. The last week of, actually, it's not really the last week. Technically, it is not, because we have the 29th and the 30th of April falls in the next week, so it really is not the last week. But getting closer to the end of the month of April. All right, let's just wait a little bit more. Good morning. Just waiting for people to arrive, and then we'll begin. Okay. Let's begin with the monthly chart, since we're getting closer to the end of the month. All right, so on the monthly chart, I had is this bullish target, which several months ago we reached, and then we closed above it, and I said we're probably going to go is test the prior highs. We had a high and then came back. So what does the bull see? Possibly spike channel. They might want to come down a little bit more and test these channel lows before bouncing again. Now, this line I didn't remove because it is now acting as support. If the bears break below it, the pullback could start, okay, a reversal, or this could actually might be already started the reversal that the bears are looking for follow through but that follow through may yield a trap underneath the EMA. But remember, this is a monthly chart, and the EMA as support sitting at 4688, 4700. If markets reaches, this month closes somewhere down here, and the next month goes up a little bit and continues to come down, somewhere around 4700, 4680 area is going to be support again. Or we could even move underneath because there's a tight trading range there. But most likely the bulls are waiting to trap the bears, and the market will go back up. But that could end up becoming a double top neckline, lower high, and reversal back down. Okay, so I think the bears are trying to close below this trend line on the monthly. Now, monthly is still open, so we don't have a clear direction there, as it looks bearish at the moment, but we are at a support also. So it could actually reverse, and if we stay above it, we could go also bounce and test this tight bull channel's high, and then make a lower high trend reversal back down. On the weekly bar closed, it's very bearish. Even though it's got an upper wick and a lower wick, is pretty visible. It is still a sell signal bar. Now the bears actually reached the EMA, but we might need, because it's a strong first leg, we might need a second leg, and we need to bounce. And a similar thing is happening here. Anyone who's selling, we might actually trap them, go back up, only to come back down again. So do we have head and shoulders pattern? Well, let's see. We had a IOI, final flag. We have micro double top, or you could say micro wedge right there with the 21st and this, and April 4, 28, and March 8, 28, and April 4. And then market started to come down. You can say this is already two legs, but technically it is leg one. Market needs to pull back a little bit, and that pullback could create leg two. So this could be the left shoulder, this could be the right shoulder, and a market continued to sell with 10 bars and two legs. Bears want to keep the market below the EMA to continue to sell, but we do have this trend line here taking out this high, is that high, and we might need to come down and test this right here and then reverse back. So there might be some trapping here, bear traps underneath the EMA. Bears want to stay below the EMA, so that means this week they have to also close it bearish, but I don't think it's going to be that easy because we are at a support, EMA support. Let's see, this whole area is support. What if we do come down and then bounce before the week actually closes? So that means we come in here, pretty bearish bar, and then we close the bar bullish. That will be the pullback. But then this trend line would act as resistance if we move underneath it. If we don't move underneath it, then we can come down and test last week's low and then reverse back up. There, as long as we keep some sort of a gap here, market come back in, might try to get back up, and then start to sell once again. That will create the bear flag. Okay, but we need to trap the bulls first. Now, where can it sell? Well, we do have the 50. This is weekly, so that's a 50 SMA. And we have several different moving averages bunched up here. But we shall see, because there is a breakout test, which was tested once, and it was a very strong bullish move. We have several different wedges here. So we have a parabolic wedge here. We have a much bigger wedge here. We have very climactic bullish channel here. Any pullback is, even if it's deep, market will try to reverse and test the highs. So you always get this even on the smaller time frames. And look at here, you have this channel, bull channel up. Even though it's more parabolic, this is very climactic. Pullback actually resulted in a deep pullback and a lower high. Then market sold with several legs down. Here is the first flag, and here's the second flag, is finally trapped under moving averages, and the market reversed back up. So we might have a similar thing. So what the bulls seeing here, now that's what bears seeing. What the bulls seeing here is a spike, pullback. So what they want is reversal and elimination of the lower high. Go test the highs, right? Is make a new high, come back and go high. Then we could come back down. So this could be a sideways and up is reversal, channel, okay? Only we come here again, and then we make a lower high, okay? But that would put it, remember, this year on weekly, this would put us into a major trading range, price action, but really tilting up. Bullish trading range is, but eventually bulls want a new high and want to continue to buy. So I need to see a trap underneath the EMA for that first, and then I need to see bulls actually closing gaps. Okay, there is no gap here. Okay, some will say this is negative gap, but I don't think it is. It's already closed. There's also a gap here. The bears close, so that makes it very bearish. So if you had a gap and the bears closed it, if you put a stop there, that's their 1 hour. That's profit taken. Possibly could bounce and then continue to come down. That's why I said if we move underneath this trend line, bears can actually look for a 2 hour before reversing back up. So this could be a little bit more deeper pullback. And one thing I want to also measure, I'm going to measure the edge to edge. That's the 50% pullback. We are at the 63%. I don't know if you guys see it, but here. That right there, 60, and really 33% because I measured it from here to there. But if you measure from top to bottom, but you always measure from left to right. So that's a 33% pullback. Is there any buyers here? If I need to come down a little bit, maybe make a micro double bottom and then trap and go, then I would do this again. It's a trick that I learned a long time ago. I measured that, okay, then I would look for a pullback to the 50% and then here. Now, the shallow pullback, if we do pull back to here, that would be our 33. We could still sell from there, but I think the market will try to get at least up to this area before selling back again. Okay. Daily last week started with this bar right here, so Monday, Tuesday, Wednesday, Thursday, Friday, and a very strong week for bears, but they have sold this week leg 1 pullback, leg 2 pullback, leg 3 in a way. Or you can say this is the leg 1, this is the pullback, and this is the leg 2. is it might need to go sideways and make another leg down before reversing back up. We are resting on the 100 SMA. This blue is 100, gray is 150, is black is 200. Now, the one thing that is happening here is that the 20 EMA on the daily is crossing below the 50. That is not good. But because we have such a climactic channel, bull channel here, bulls will look at this as a attempt to sell first leg, pullback is second leg, maybe pullback in a third leg, or is leg one, pullback, leg two, pullback, leg three. Let's take a look at something. Yeah, you can see here, so this is double top, lower high, creates another lower high, right? So that's bear flag, double top, and a lower high within the bear flag. So it's selling. So we need to go up a little bit and create another flag perhaps. If bears want to keep selling this, that's fine. Then this would be leg one, pullback, leg two, pullback, leg three. So this week needs to then sell before reversing back up. But how far can we come down? Let's see. You see this trading range right here? We might need to test its high, 4,900, but I'm more interested in 4,700 area, and I'm going to show you why on the candlestick charts. When I pay attention, whether it's on the 5-minute chart, whether it's on the hourly chart, whether it's on the 15-minute, 30-minute, I don't know, 20-minute, whatever you're using, or daily, okay, is I look at where impulsive moves begin, meaning something violently happened, that market started to move in one direction very fast and had follow-through legs, okay, so going against this was never an option. So I look for those areas. There are very tight balance zones, tighter and smaller it is, mightier that it is, strong it is, but it becomes a magnet. So those areas are, I'm not talking about the large trading ranges like this, I'm talking about these areas, okay? Look how tight the market was. Look at here, right? It gapped up and then did this and keep going. So to me, market may want to come in here. And that happens to be right around this high, and that is around 4,700. But we need a catalyst for market to drop that much. Right now we're coming in here, there's a gap here. We're probably going to test that gap. So we could bounce, in fact, okay, because we kind of have 3 legs down, okay. Or you can say there was a wedge here, and the market actually invalidated that wedge, so it's a wedge failure, and we get a measured move target. That's fine, but look how strong this is. So if I actually measure this, okay, that was the measured move. Market is trying to get to maybe 2 times the measured move. So this week could be somewhat bearish and then reverse back up. So that's we might have first. Okay, or we're going to reverse and we're going to get back to here, and then we're going to reverse back down. We're going to have some kind of a double bottom around here before actually having a major trend reversal. But on the long term I think market will want to come in here. I'm going to mark this area. Okay, so this area. And within that area, okay. So what about here? What about bulls? Can we actually reverse back up? Where would we go? So this day right here. So that was Tuesday. And the Tuesday was the 16th. So this is this doji area. We might actually need to test that area. Okay. So there's a bit of a gap way before. It's not the best gap, but from the close of that bar to here, or the high, So somewhere right here, we might actually go test and then come back down. If we make a double bottom, then we go higher. Okay, what do we have this week that could act as a catalyst other than the Middle East news? So I'm not sure what is happening with the Middle East at the moment. We all are following, but we do not want any bad news coming out of there. So we hope that they find some kind of a peace, some kind of progress, for the sake of all the people there, but we will pay attention. Other than that, financial news is we don't have anything happening today. Seems pretty open, is nothing major, but tomorrow is PMI composite flash at 9:45 a.m. Eastern time. And then new home sales will follow 15 minutes after 10 o'clock. So starting 9:45, 10 o'clock, we have several different news. And then 2-year note auction at 1 is nothing after that is significant. Wednesday on the 24th of April is durable goods orders, 8:30. So pre-market move. I don't think it's going to be that big of a deal. Maybe a bar or two, it'll move fast and then it'll settle. But if you're trading oil, then you have the status report. Inventories will come out 10:30. Is anyone who's trading oil, I keep saying this, hopefully you're paying attention. That's the one fundamental, is you have to pay attention to the result of the report. If the status, which is inventories, come out low, that means they're going to mark up the prices. Oil, I don't know where it is, but they were expecting more than $100 a barrel. Not sure where it is right now. But they're trying to prevent the $100 reach. I don't know if they reached it already last week. Now, if the inventories come out, report comes out high, the numbers come out high, that means you have too much of a something in the market. That'll be the markdown of the prices, right? Supply and demand. So is on Wednesday, nothing really happening, maybe 5-year note auction at 1 p.m. So that's what you need to pay attention, nothing in the afternoon. But the Thursday is the big. GDP is coming up 8:30. International trading in goods, 8:30. Jobless claims, 8:30. Among the three, GDP is the most important, okay, which will affect the Friday's personal income and outlay and consumer sentiment reports. So you got the 8:30 to 10 o'clock major news. And on Thursday, then a bunch of bill auctions in the afternoon, 7-year note auction at 1 o'clock, nothing more, and then leads into Friday. So everything really starting tomorrow, 9:45. Just pay attention to that. If you don't know where to follow, econoday.com or Financial Juice or Forex Factory. I like to filter my news for US only. And then earnings week actually kicked off last week. So big names, companies will report this week. And so you need to pay attention as well. That should move NASDAQ and S&P pretty fast. Okay, so we have about 8 minutes. I'm going to grab some water. Oh, one thing that I didn't actually look at is the most important thing, which is the hourly. So let's go through the hourly. I marked last week's range. So here's Monday, Tuesday, Wednesday, Thursday, and Friday. It's a pretty big range. Any reversal, we could pull back to 33% and a 50%, but I think the sellers will be waiting there. We might make a double top, come back down and test these lows, but it could be a shallow. If we keep some kind of a bull gap open, bulls will buy and they will try to get above the 50%. Then 66% we might test. There's a huge gap right here. Okay, then that would be the target for bulls. All right. So if we start to reverse without taking out the lows, then you know where it could go. Otherwise, if we become bearish, I'm going to be paying attention to this gold line and then the breakout line underneath. Okay. Globex session, it's just making its way up, so it actually doubled the Asia session. I believe. Not quite. Bulls probably want that target, but nothing's guaranteed. However, we do have a bull gap right here. We do have head and shoulders. The problem here is this bull trend line. Bulls are kind of holding this, and if they keep this gap open, they can easily go right back up and test these areas. That's why I marked these are all targets. One that I'm missing is that. Okay, so that means this gap is open. They can invalidate the head and shoulders pattern. And invalidating head and shoulders mean it's a invalidation of the wedge reversal to downside that would then expand to the upside. So I would take this cup handle and project it up. So you have two cups here. That means market is trying to make its way up. Okay, but we shall see. So basically, there is something called market structure along with the market cycle. Then you can learn about the market cycle in the Brooks trading course. And then I apply the market structure, which is pattern recognition. So when market is coming down, right, and finally it makes some kind of a expanding triangle or inverse head and shoulders, it then tries to get back down with like two cups, okay? And those cups, inverse cups, fail. Then I look for bulls to actually take out those cups highs and become bullish, all right? Then I start to look for flags. Now you can see it clearly here. Market came down. Here is the expanding triangle, failed. We started to make gaps up, but look at this cup. Okay, so they have tried one more time. They can't even take out this low. If we cannot take out that low, we are not coming down here. Okay, that basically a neckline on its own. So that means you're going to target that high, and you can buy, right? So that's what you're going to do. And then you can be conservative with your targets. You can take this structure, project it up, or you can take this buy area and project it up. So came very close. I would actually take that high because that will be my 1 hour target right there, right? And then you have this, so I would take that. That would be the actual measured move because look, it came down, so we're in a bull swing. So now we're making a positive cup and handles, right? So here is your positive cup. Here's another cup. Bulls need to take out this. Now, taking this out is not a good thing, but we have not taken this. What happens when we take this low? Then I'm going to be bearish and I'm going to look for market to come down and test this gap and close this gap and come down and test these lows. But only if we take out here and here. If the bulls cannot close this gap, okay, and cannot take these down, that means it's going to reverse back up. And it's going to take the structure and it's going to just clone it up. So there's a trade for me in there that I can capture at least 20 points or so. Okay, we'll see. Or 15 minimum, 10 to 15. If I get 20, hey, that's great. Is minimum 10, I should say. But we'll see. Right now we're at a decision-making area. Bears want close this gap, take out this, invalidate, and come down and test and form a trading range. That trading range, we could come down, everybody else start to sell, others will buy and test the 50% of the trading range. That's what I like to look to sell. Now look at here, this is a great example. Market is very bearish, right? Always in shorts, even the pullback actually sold. So this low and that low is very important. I'm looking for two inverse cups and selling. Problem here is that we came very low, but we could not take out that low. So what is the market going to do? If it reverses, it's going to try to go test that high and possibly test that high. They did, but did we become bullish after that? No, we couldn't. We ended up in a trading range. Where is it going to come down? Mark the trading range midpoint and see if we can move underneath the midpoint. If we move underneath the midpoint, then I'm definitely expecting this low to be tested. What do I need? Several bear flags, right? So here is the breakout. We tested that low, somewhat of a breakout, but I'm not going to sell it blindly. I need a pullback, okay? And I'm looking for a formation of a bear flag, 1, 2, 3 wedge, top, or expanding triangle, and we move below the 50% of the expanding triangle, aka trading range, then you can look to sell. Now, since you have a structure, take that structure, clone it down, or take this structure, okay, trading range, clone it down. Either or is your measured move target. It's just follow the breadcrumbs, really. It's very simple. So market has this, right? You're going to look for a flag. You're going to look for another flag in a triangle, or some will call it pennant. Is we're going to go back up again, right? And then the final flag reversal is you can get a head and shoulders pattern, so and so, right? Like this, right? And then go back up again, possibly, right? You can get a double top, sell, 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 sell. It could sell, right? And then reversal back up, and then comes down, maybe comes down. If it takes this out, then you keep selling. But if it takes that out, you're going to look for a couple of flags and a reversal pattern once again. It just follows the same footprint. And the footprint that Alberts talks about in his course is not the footprint that wildly known as the order flow. He doesn't talk about the order flow. Okay, he's talking about the footprint being the chart patterns and what market shows you in a candlestick forms. Okay, so I just want to clear that up because there was a conversation a while back and he created an argument about someone who likes to trade with order flow. Thought that was the footprint that Al was talking about. That's not what he's talking about. Okay, let's go. All right, so we have a wedge top and a lower high head and shoulders pattern. Market needs to get this neckline. Bit of a difficulty there because we have an open, well, it's not open anymore. All right, so the bears actually closed the gap. We do have a trading range. We're testing the trading range highs. This gap is now closed. If that body closes bearish, you can measure your 1 hour target. Market will want to probably come down to these lows. And if they break those lows, then we will come down to the key price level area. Right now, the first test is the Asia high. We are testing that now. So the bears are tasked to close that bar as bearish as possible to continue to get a follow through first into that low and then possibly here. But that bar hasn't closed yet. There's still 12 minutes and 50 seconds. So these bears will take profit here. So expect a bounce, possibly. That's your bounce. So when do I sell? I don't sell the first bear bar just because it's coming down. I look for it to close bearish. Take out the open of this bull bar, or take out this right here with a bear body, or take out that right here. So I get a bear close, that's great, then I'll look to sell. But if I don't get it, I don't sell. Market was coming down. Remember what happened on Friday? In the morning, I kept pointing something out to you guys before leaving the session. I said, pay attention, from the open market is happily selling at the EMA, consistently selling the pullbacks. And I said, when we reverse back, which we will reverse back, that's right there is expanding triangle, right? We're going to get back to the EMA and test probably above the EMA, right? But probably it will make a double top and it will sell. What am I looking for? I'm looking for inverse 2 comps and taking out that low. If the bears take out that low, I'm going to look for a bear flag and I'm going to sell it. So in the afternoon, I was actually selling this into this trading range before. And then I left before this trading range form. I ended the Friday and just walked away with glory. But you can see what I called earlier on the 15 minutes, same thing on the, you can find that market structure followed by market, sorry, I'm just running out of words here, anyway, the same on the higher time frames versus smaller time frames, the same thing. It really is, that's all it follows along. Because machines need guidance, and machine needs to look at something and see something. More obvious the pattern on the chart, doesn't matter what time frame, that's what the institutions will trade is. And if the institutions can clearly see a pattern, that means their machines are recognizing the patterns, that's how they're programmed. That means many institutions will trade that. So you should be trading as well, right? So what do? We follow the footsteps of the institutions. We don't go against them. Oil is 81. Okay, so they are trying to mark it up to 100. I don't know what the report is going to say this week, but that's where it's trying to go, which OPEC doesn't want $100 a barrel. But with the war and all that, who knows, right? Okay, first bar is strongly a bull bar. Now, how can markets sell here? Many are already selling one tick underneath with a stop above. I like to wait for 2 bars, okay? Al actually talks about how to trade the open in his books. The first time I came across his instructions, it was in his very first book, Bar by Bar Analysis for the Serious Traders, the blue book we call. He actually goes over many examples, so better to wait for the second bar for confirmation. If you get 2 strong bear closes, that means that's a trend from the open market could come down pretty fast. Where it might be looking for some gap areas. There's a gap right there. Okay, the whole thing is a gap, but this is the first one. I'm interested that they could try to come in and then bounce. What if the second bar, say you sold underneath bar 1, okay, and then the bar 2 suddenly closes very bullish and then takes out the bar 1 high? What do? Many traders will actually take the loss, okay, it goes just like that, takes that out, and they immediately reverse, and then they buy, they make up the losses way more, so they just reverse it back up. We don't have that. So far, anyone who already sold the bar 1 is somewhat making money. They just reverse it back up. We don't have that. So far, anyone who already sold the bar 1 is somewhat making money. So what I'm interested is around, there's nothing there. I'm more interested in here. Nothing there. I'm more interested in here. It's a head and shoulders pattern with a neckline. This is the neckline. Bears need to break this neckline, but then they have to come back and retest. So if they break the neckline, they come back and retest it, then they can sell into the Globex low. So they need to really break this line here. Not with just a wick, with a body. So they need to close a bear body. If they're serious about it, then they would come in to the key level, which is the Asia mid, which is yellow label, and then the midnight US open today, which is the green label. Failure to breaking any neckline, we could bounce, then we could be in a trading range. I still need that bear body closing. So far they're doing okay. And that's the gap. If they do close it, they're going to target 1R. Say it closed like that. I mean, I need to remeasure it obviously as is, but imagine it closed right here, and that would be their 1R. And then 2R is the Globex low. So that's generally, I'm using gap as the first criteria when it comes to that, right? You don't have 2 bear bars here. So market is kind of hesitating, but bar one is strong, they sold probably the close or underneath, is because it's at the top of a trading range. But now they're showing you indecision is bar two after a gap up like that. Now you're wondering if this is a 3-bar reversal. If we get a third bar now closes bearish, then generally what I do is I measure the gap breakout. I'm sorry, the 3-bar breakout, and I look for is this area to be tested. But that's with, if I need confirmation, obviously I do. If I want to sell here, is because bar 2 is not a good continuation bar, I'm not going to sell. I need bar 3 to close below bar 2 with a bear body. Then that would be a 3-bar breakout. Then I would target, first I would take profit in the middle, half R, and I would leave a runner to 1R and possibly 2R if I can get it. But it hasn't set up yet. This is different. You don't really have a gap here. This is a trading range open, whole different ball game. Same here. It's a slight gap up, but you're in a trading range, right? And doesn't matter. Not a good setup. Okay, so here is a gap up, and it's a bear. You're kind of at the top of a trading range, so everybody's already selling bar 1. Problem here is the bar 2 is not a bear, so now everybody's panicking because their stops are there. So market goes and tags those stops, but one thing that, now what do? You're kicked out. You're kicked out of your position regardless, okay? Maybe you put it there, then you're a good trader. That's fine because there's this trading range. You want to utilize the higher of the trading range and get a wider stop. My wide stop is like this, okay? I measure the entire trading range, edge to edge, okay? I'm taking the bar 1 under and the bar 2 or 3 low because at that point I don't have bar 4 high, I don't know. So this is my trading, this is where I put my stop. That's one time the small trading range is if I want to be safe. However, for anyone who wants to go long right, they're now kicked out. They're looking to see, assessing the situation. Do we want to reverse this and make the losses as this goes up? Or what do we do? There's no bull bar closing above bar 1. You cannot buy to go. But then you get the bar 4, right? In order for this kind of consecutive bear bars to show up and bears to actually move it down, this is market makers, they need to create a frenzy. They need to create volatility. They need to run stops. They need to kick people out, bring people back in. So when you see this, then you're like, oh, we cannot buy this. We got kicked out, but we can sell underneath and expect a couple of legs down. That's with the gap up and down setup, not with the trading range at the open. I don't have a clear breakout from the neckline on a higher time frame, which is Globex, 15-minute. So I don't have a confirmation yet, but we did take out the neckline. We just need to take it out with a bear body. And on the 5-minute, if the bears actually come to the decision and close that bear body underneath bar 2, then that measurement I called for is still valid. Then I would look for somewhere around to be tested. But if they cannot, then I am not selling. See, it didn't work out. Where is that bear body? I'm not selling. I'm filtering trades this way. And it's actually the second leg down, and the bears are trapped, so the bulls are now buying above bar 3. Market always looks for some kind of a double top first 20 minutes or so, or until 10 o'clock, generally 10 a.m. I look to see some kind of a double top or double bottom. We might get that double top with bar 1, but it hasn't really set up yet. Or we're going to go and make a wedge top, okay, and then we'll sell back down. We have a wedge here, 1, 2, 3. Is this a higher low? I don't know. We're still at the top of a trading range here. this, I need to put that. That is the bar one open, so open of the day. Bulls trying to get above the open of the day and create bullishness, and we have two magnets above, high of yesterday, and then the 1 hour EMA. But I need to see bull bars closing above open of the day tick price. Otherwise, it could create a double top here. Now, here's what why I didn't want to sell. This bar had a huge gap down, bar gap down below this moving average, but then closed on its mid. I don't want to sell because it's lower wick. There's bullish pressure, and bears really couldn't close it closed on its mid level, but it's not all that bearish. Some bulls, if they do close a bull bar, they will buy with a stop under maybe that bull bar. So to me, when something set up like this, I don't sell the close of a bear bar with a mile long lower wick and then expect a 1 hour, 2 hour. It could reverse and go right back up, okay, is because market sees this area as support and they see 1, 2, 3 wedge bottom. So it's basically now an expanding triangle for bulls, therefore it's a bull flag. They want to get back up here. So if this bar now closes, everyone else will buy it. Many traders get trapped by selling that. That's something that I learned to filter, is what happens when the gaps close, but the bears cannot close a strong bear bar. They will sell it anyway, and then they will trap, but you can buy against that and then run their stops either above that bear bar, above these highs and because bulls are probably trying to get back to the Globex high, but only if they can close this bar. Now, I'm not going to buy it if bulls cannot close a strong bull bar here. So this is sideways market. It's a limit order. If I want to take any trades, then I also have to counter in because it's a sideways market, limit order market. There could be sellers who want to sell the close of first strong bull bar here. But it's just, I have to, you got to, but that means you're scalping a couple of points. What I'm talking about with these setups is a swing setup. So would I go for that scalp? I don't know. I probably won't. If the bulls cannot close a bull bar above this yellow box, okay, no one will buy the close. But if they do close it, then they will buy, and they will target this high and that high, which is Globex high. And they will take profit there and leave a runner for Globex high to be broken, and their runner will run, and they will trail their stuff up. But that hasn't decided yet, so I can't really touch anything. So this is where this is why Brad every day writes the same paragraph, because you have to learn that sometimes it is okay not to take the first trade in the morning and just simply wait. Because look where we are. Remember on Fridays I said I don't want to buy this because most likely we will sell. Bears want a strong bear close. This is hourly ETH. And if they get that, then we will sell into this target. That's just one of the many targets that I only put in on the chart. How do this get invalidated? Bulls need to take out that high. So you need to see strong bull bars. Then we can start to ascend up to the moving average. So it's still not yet decided. So we're at a trading range. It's also a wide bear channel here. So I would say impulse correction. From that low to that high. This is a conservative target. This is where bulls are probably trying to reach. Therefore, they're dragging that 15-minute body and they're trying to close it. Now, if we reach there, we might even also reach here. So the target is really here for bulls, right? And if we start to close above it, then we're going to go up to these highs, possibly high of yesterday. Bulls trying to keep the market above the open of the day tick price and keep going higher. And bears want to trap them and get a double top and sell. But you have already a confusion there and probably because it's a trading range, machines see this bar as a trap, is bar 4. So that means bear machine sees that, oh yeah, let's trap them. This bar is designed to sell. So they sell it and they try to grab a couple of points, maybe 2 points or 9 ticks. If they cannot get another bear bar after bar 5, then they will exit out of the markets and they're going to let bulls to get back up here, maybe even higher. If they get the second bear bar, then they will try to test the lower third, midpoint, and the lower third of this bull bar. Possibly even open. But any failure and keeping a gap open like that, then the bulls will try to bring it back up here. So they're still trying to sell. So if you actually are a bear and you sold this close, all you made is 225, like 2 points and a quarter, right? That's a solid 2-point scalp. That's what you're going to get. But if they don't see a follow through bear bar closing way below 5 with a bear body, those bears will be quick to exit out. And then we get continuation into the high of this bar or this trend line. And on the higher time frame, bulls want to bring market up to this trend line and break above it. Bulls want a wedge top into some kind of a resistance area, which is probably around here. But they have to close a bull bar. There's also this trend line, but they broke it, so there's no use putting it there. Small trend line there with a high of 1 and 5. Maybe from here it's already broken. See, it's already kind of broken, but you need a bull bar. Kind of broken, but you need a bull bar. Bear's trying to keep it below the trend line. The bar hasn't closed yet. See, that trend line is holding. Bear's still trying to sell. Now, what about the bears who already sold underneath bar 1? Okay, what about them? What are they doing? Well, they're selling higher to break even, right? So if you're a bear, you sold here, and then this has happened. Oh my gosh, what do? You're looking for a strong bear close, maybe bar 5 closed, or at the high of the same bar, somewhere around up here, you're gonna sell. So let's measure from bar 5 low, right? So then at the minimum, they want market to come down to here. Anyone who sold is at the high, they didn't really enter. Anyone who sold the close of bar 4 that's their average safety price. But if this bar closes bearish, that'll be very problematic for bulls who bought above bar 4. What are they going to do? They know that some bears will exit out at the 50%, so they will buy into it. And so that was right there, right? Anybody who bought above bar 4, then they want market to come up to here, right? So they can break even. So that's why the market is going back and forth in that area. And now bulls are swinging this back to the targets. I went long there is with the pullback, and I want this to be tagged, and furthermore, okay, so I just took a little bit of profit there, and I'm holding to see if we can actually get to that prior high, which is somewhere in this green zone or 37.50, but I did take. So the machines do the same thing because this is important. Is profit taking is projected target, but and which generally, if the is horizontal, this is the horizontal target. Generally, that's the target. If it's further away and the projected target line comes first, that's the first I take a profit. Sometimes I don't even expect this area to be tested, but I'm holding a runner. I want this to be tested and the market to come back up here eventually. So you can see machines are respecting that trend line. But that doesn't mean that they cannot break it. It's just that I have to always pay attention. This is something that I've been observing long time, for years. So whichever comes first, I will take profit there because there's a potential of pulling back, may not even coming back to it again. But we now have 1, 2. Most likely we will have another push to get a wedge top. So I expect market to test this area, maybe even breach a little bit. And on the higher time frame, we do have the expanding triangle bull flag. So the market seems like wanting to get above the Globex high, and then furthermore test the trend line, most likely, but we'll see. That means on the 5-minute, we have to close above this area. On the hourly, we have a magnet above, which is this line right here, is this line on the hourly. So it seems like market may make a way up there, but could be resistance there. We have an inside daily bar at the moment. Can market actually go up further? Well, we're smack in the middle of it. So it might actually go and test the open of yesterday. Open of yesterday is, I don't know, mark that. Wait, that's not it. That's way before. Open of yesterday is here. Make that very faint color. Ugh, you can't really see that. There you go. That's open of yesterday. Might be somewhere we need to test. There's a breakout test area. It went above and then sold, came back, sold. So that area, 42.50 to this line right here, could be magnet for bulls. That is a small cup and handle. But bulls need to break that trend line. They can quickly get to 50.36.50 area if we get a bull bar. Or furthermore up to 50.40 and furthermore up 50.43.50. Need a bull bar. Bear see this as a double top, and if they want to sell, but I think we need to make another high here. I would prefer a wedge top before I sell anything. Unless they see this as a double top, or that's a micro double top, but I'm talking about with the bar 1 high. Or they might see this as a wedge top already, but it's so not balanced, so I don't think so. But if they do close a bear bar, they see a double top neckline. There might be some sellers underneath bar 6 waiting, but I would not sell into a bull gap. So I think the bulls will try to close a bull bar here, and their goal is to get to the 36.50. So on the higher time frame, bulls could not close a bull bar above these this gap close. That is not a good sign. So I can't really buy, but my buy was based upon these 5-minute charts, and so it was a quick scalp. But if I were trading 15-minute, I would not have bought the close of that inside bar bull bar. Because anybody who already sold this bear bar close, disappointed with this bull bar, inside bar, and they will sell above this bar, and that's what they did. Okay, so there was, if I were to buy, I have only a scalp there. Now, bulls need to close a bull bar in order to get up here. That's why I keep saying. Otherwise, it's just back and forth until one side exits out. Look how many times the bear's been trying to sell on the 5-minute chart and not getting a follow through. But we don't know how bar 9 is going to close. So if it closes bullish, then the bears will exit out, and we're going to get to my target, 36.50, 36.25. And if we close above it, then the bulls will try to drag the market to 50.40 or 50.43.50. What if they can't? If they cannot close a bull body, bears will quickly take it over, but we'll see. I'm waiting for this bar to close. I still have a runner, by the way. Remember, I scalped here and I still have a runner. If they do close a bull bar, I will buy again and add to my 1 contract runner, so then I will have 2 contracts. But if they don't, then I will quickly exit out and call it a day. Struggling right now. It's a 1-bar trading range with inside, outside, inside at the moment with 7, 8, and 9. If bar 9 closes a bullish inside bar, that's a breakout mode. Bulls will probably try to get back up there. So the target is still 36.50, I believe. I mean, it's very decent ATR. Not decent, it's actually pretty fast. It's more than 5 points. So it could actually get there super quick. But if the bulls fail here, bears will bring market down, possibly to 25 or 24.25. So waiting for this bar to close. There's not a wedge top there yet. We didn't really form the third push. So first pullback, second pullback, possibly third. Can bears reverse here because of the IOI and suddenly bar 9 closes very bearish? I mean, there's still 2 minutes here. I would not bet on that because this gap is tested with bar 8 and the bears, I don't know if the bears fail to sell. This bar hasn't closed, but if it closes bullish, then I will say bears failed and the bulls will try to bring market up here. If bar 9 closes bearish, then bears have a chance. They will try to close this bull gap. But as is, you know, a bull bar closing inside of an outside bar, it could be a breakout to the upside. So I don't know yet. I have to wait for this bar to close. Okay, bears getting serious here. You see how they're turning that bar as bearish as possible now? All right, they did break. But there's also now down on this, up on this, down on this, up on this, down. So there's also a wedge bull flag there. So bulls already bought is high 1, high 2 above bar 6. Could be buying again down here because they see a 1, 2, 3, 4, 5 is single bar trading range. And they're not happy because they see this as, see, I would never buy above this. I bought the pullback instead and scalped. But here, if they did buy above bar 6 strong bear bar, they will buy again, and they're going to try to get to the safety. But it's not an IOI anymore. There is IOO. Wait, it is 6 and 7 identical bottoms. 5 is I, O, even O, so triple O. So this is a breakout mode. But which way it's going to break out? See that? I and triple O's. Is this the top of the trading range? Yes. Are the bears trying to sell? Yes. Well, we don't have an inside bar now. Bears can bring the market now down to 25.25 or 24.25. But I have to give bulls a chance to break even. Maybe they vote that. I don't know if they're going to be able to test right here. Or they're going to buy lower because it's now a trading range. But anyone who looks at this trading range, they want to go and tag this midpoint. It's just kind of difficult because you're buying 2 bear bars. One of them opened from the close of bar 8 and then close lower. So it's very difficult to me, this is difficult to buy. But anyone buying, machines want to test the right here. And they also see a bull flag, but it's kind of tough because bears now want their target. So there's a lot of back and forth. I want to see what they're going to do there. Bears want their target minimum 25.25 or 24.25. Market sees a double top, micro double top, lower high, so they're trying to bring it down to these levels. Anyone who sold here, they're trying to get back to the close of 1 or low of bar 1. And if they do that, they don't have to stop here. These bulls probably going to buy lower because they know market could come down here. However, bulls probably want to maintain this gap to EMA open and then buy and swing to the upside and Walmart it. But if this gap does not stay open and the bears actually close it, that's not going to be easy for bulls to start that swing. So they're trying to keep this open, and they're buying and trying to get back to here. I can also measure. So if you bought there, you bought again with the open of the strong bull bar, then this was your break even. Now anybody bought the close of 9, they're trying to get to the 50-30. Bulls want this gap open so they can get above the open of the day tick price and keep going higher. This is very difficult to trade here, in my opinion. It's a lot of fixing. It's a small trading range, but you're at the top of a bigger trading range, and you got OOO, right? So let me see if I can show you something here. Just give me a second. So consecutive failed tops. You got these. All right, and the market starts to come down. So that generally happens at the top of some kind of a trading range before swinging, or at the low of some kind of a bigger trading range, and the market starts to swing back up. Okay, and this is can we get this? I don't know. I think it has become a little bit late for the bulls. So they could have get this Walmart, but they kept the gap open, but they had to do it right around here. So bears now trying to close the gap. Okay. They reached the target, 50.2425. They even moved further down below. But now we have a double top failed breakout for bulls. Now we have a double bottom. Will that be a failed breakout for bears? It could be. We could actually come down to the EMA and then reverse right back up again. It could be actually a flag again for bulls, and then we could reverse right back up again. So be careful there, because many bulls are stuck up there. Will buy at the maybe at the EMA. Bears are trying to bring market down here. They're trying to close the gap to the EMA. That gap is still open technically. So I did exit out of my long after bar 9, and I didn't see any bulls. I didn't want to linger because there's another trade to the downside, and I'm looking for a market to come down and test the EMA. So let's see if bears can actually extend this further down to 50.16. I don't know if they're going to be able to, but 50.16.50 could be the target, but we should bounce here a little bit, because you got a breakout failure. We now have a trading range. There could be buyers here. Okay, they are extending down to 16.50. See if they can actually test it. Bulls failed there, and limit bear sold. Some sold underneath this bar. So they want 1R, that's 16.75. I said 16.50. Somewhere around 16.50, 16.75, bears want to test. You gotta somehow exit, right? You can't hold a runner. You take profit here and market is not doing what it's supposed to do. They bought a little bit and they exited out with 9. There's no bull bar. They couldn't even get back up with bar 10. You have to exit. You can't hold a runner that is not running, and now it's becoming a fixed trade kind of thing, and that's not good. Market is coming down to 16.50, 16.75 area. You're going to be able to tag it. Could go a little bit lower and test like 15.25, 14.25 area. I think somewhere in here the bears want to test and then bounce a little bit. Okay, so they did come down to the target. No need for that one. Can they actually break and get a follow through into the Globex low? I'd like to see a pullback here, maybe like a 5-point, 6-point. We could get a 9 to 10-point pullback as well, but we'll see. We are testing this gap area. Bears want to close this gap and continue to sell, but they're probably, if we cannot close it, there will be some pullback. Some bears taking profit there. But if on the Globex bears do close a bear bar below this key level, we're going to keep selling into the Globex low. So it's making a decision right now. I like to see a little bit of pullback because it's just too low to sell. Just a little bit. We broke the trend line, which was the neckline. I like to see a pullback to that neckline and see if there are any sellers there. I'm looking at absolute gaps. You can use just the bodies if you like. I'm looking at the empty areas just to be sure, because wicks are bad price action. Good, that is a pullback, but I like to see a little bit more. We are testing that wick low, but I like to see a pullback to the trend line. I would like to see the trend line test, but I don't know if I'm going to get it. I was on mute. So what I'm trying to say is that I don't know how accurate I am with my trend line because I don't really snap to the extremes, but I try to stay as accurate as possible. And I want to see bear market actually test that trend line, pull back. Now, what if they don't? Well, if bears need to close this gap, then they can close a bear bar, but better to test that trend line first. So the limit bulls bought in here. Remember, if they're stuck up here, they're going to buy 5 points, 10 points lower, right? So that was high 1, high 2. Maybe they bought above. They bought again here. They want market to get up to 23.50. 23.50 is about 2.5 points above this trend line. I don't know if we're going to get there. The other bulls will wait for a good bull bar because they have bought here. I don't know if they actually exited with bar 9. If they haven't, with bar 11, disappointed. So in order to buy again for the second time, they need a good bull bar. So anybody who buys here scalps up there because they know sellers also waiting at the high of bar 12 probably. Wanting to bring market down. So it's a very dangerous area to do anything. If you do anything, you just take a trade and scalp and move on. So the scalp would be, say you put a buy order right there, right? ATR is 6, so you get a 5.25 minimum. Look at that, right? So 5-point scalp is established there. So those bulls are taking profit there. So it's not guaranteed that this is going to go higher. Bears want to break this key level on the Globex and then come down to the Globex low, maybe even lower, but at this point I am flat. You have an outside bar 12 and an inside bar 13. Outside bar is a bear bar, so the pullback to the outside bar is upper third. Sellers already started to show up, but bulls want to test way above bar 12. There might be some sellers above bar 12. If they do close a bear bar right here, we will come down and test the 13 low and possibly 12 low. But there are more bulls waiting to trap the bears trying to get a breakout. Now, we had a double top here. Now we have might be actually making pullback and then come back down before reversing back up. So the bears see this as a double bottom, or bulls see this as a double bottom. And here's a double top, is double bottom. It's kind of angled, but it is. So market is trying to get back to the 12 high. It might go and test 50.21, 50.20, 50, 50.20 and 2/4 to 50.21 and 1/4 area, or maybe further up to 50.23. But I don't buy here. This is not, I don't buy against this. There is a gap here. You see this? With the bar 11 open. I'm sorry, bar 11 close and bar 12 open. So bears want to sell and have another leg down, probably. So the limit bulls are deciding here, do we just scalp out and exit out because this is going to sell another leg down because of that gap right there? They can, and this is why I don't buy. Bulls want to test the 12 high, see what's there. If there are no sell orders, they can push it up furthermore to that trend line. But it's just not much of a room there, and I don't want to buy into that trend line. They can make a liar out of me, and that's fine. I'd rather just sit tight and not do anything. Okay, we are testing the 12 high. and it just reached the targets. 23, wow, it's going a little bit higher. This area probably. Gap bar 11, so you do have a gap here. It's also a breakout, somewhat follow through, now pull back. If there are any sellers, there might be right here. There was a micro double top possible bear flag. Bears were looking at the high of 12 and possibly 14 high. Bulls kind of breached that, and that's not a good thing. But if anyone who was selling still, they're still going to sell up there. You see, that's why I said we might test it, and if I buy and then it starts to collapse down, I don't want to be stuck in it. But the one thing that on the 5-minute I'm seeing is that the bulls probe this area and they're seeing no sell orders. So they're trying to close a bull bar here. And they're trying to close the gap now. And the reason I also didn't want to buy bar 13, although it's an inside bar, but that body didn't close up. Now, bar 14 did. Now, you could have said, okay, I'll buy this. I'll take a chance with a small risk down here, and I'll go for a 1-to-1, okay? That would be fine, but I didn't go for it. All right, say you bought above 14, or you bought the close of 14, however you measure it, because you see that the bulls are filling that upper wick of 13, and the probing did created some selling, but it ended up being a very weak area. So it's most likely then this gap bar's upper third will be tagged. That's what they're trying to do. But this is the 1R. You can also say, well, this is my breakout, but it's not a good breakout. If you go back to the bonus videos 15 and 16, look, you got an outside bar and an inside bar and a good close. Okay, that's fine, but that body did not really take out the outside bar's 12 high, that bar 14. So now if you bought above 14, you don't need to put your stop here. You can put your stop underneath 13. That will be your accurate 1R. Bulls might be looking for a 2R target, but problem here is the bar 14. Bar 14 body is not above, not even above, close above 13 or 12. So I think you should take the money and run, because this can come back down now. And you have a breakout bar, which is an ATR bar. I call it average true range large bar. So the pullback to its 50% and 66% sellers are waiting. So if the limit sellers are there, you have to kind of heavily take profit at the 1R, okay? I didn't buy this because I was just too busy marking stuff and talking about it. And I really didn't feel confident about bar 14, the way it closed. Yes, it's momentum, but it should have closed that one tick body above. Actually, I might be wrong there. Let me see. No, it didn't close one tick above 13. So I was right there. And that made me less confident of entering one tick above 14 with a stop below 13. But it's still a valid, if you did enter, you would have made, so one tick above, you would get filled at 21, and you would take profit there. That's 3.5 point scalp, but it's still dangerous because you know sellers could be waiting one tick below, one tick above at that blue line. So you have to be quick about taking profit. I just didn't feel like taking the trade. But some will say, hey, that was very valid, I took it. That's great, then you made money, okay? This is all explained in the IOI, III, or there's, yeah, basically the bonus video 15 and 16 with the examples. Where to put the stop, you don't need to use bar 12 low as your stop placement. Now, how do the bulls continue higher? They need to close above 24, 50.24. They need to keep pushing, right? This 24.25. Then they can reach around 27 and 28 area, 50.27 and 50.28 area above. If they fail and we get a bear bar here, we will push down towards 17.25, 17 area. Okay, so they're trying to close above 50.24 and then test 50.25. If they can manage to close bull bars, then we could go higher. But if they fail here, we will quickly pull back to the 50.17 or 50.16 area down below. So I'm also looking at the smaller time frames just to see if they are failing, they being the bulls. I'm looking at 1 minute as well, and I don't see a good sell signal bar for bulls. I'm sorry, for bears here. So therefore, you still have this bull body on the bar 16 on the 5 minute. I also look at the tick chart. I don't really open up on webinar, but I do have a tick chart just to see how fast the things are moving, what kind of patterns it's making and that tick chart is 1,000 tick charts I look at, and they seem to be trying to create a bear body here, and that could quickly bring market down to 17 area. I'm sorry, 17.25 and 17. So in the smaller time frame, bears actually got their sell signal. There's still 1 minute and 20 seconds left. If the 5 minute closes a bear bar, we could come down to 17, maybe a little lower, I don't know. Bear bar, we could come down to 17, maybe a little lower, I don't know. But you see why I didn't want to. We would not have gotten this if bar 14 were to close one tick above 13 or 12 with a bull body. Here we go. So I did sell, took a little bit there, and looking for if I could get the test of like 1550. Market is looking to make a wedge bottom with the bar 3 and bar 12. So market wants to test the bar 12 low. Bulls got stuck there. I did not want to buy into that. Kind of expected it. Bears looking to test the bar 12 low. Probably some buyers underneath bar 12 low, not so far away, is wanting to trap those bears trying to get a break even. We might break this trend line only to buy and bounce. Okay, so be careful there. And we are testing the 12 low. That's good for the bears. They probably want the 1250. And if they can actually close a bear bar here, they could continue to come down to 50.10. So my runner did pretty fantastic there, but I want more out of bears. Test this trend line, move underneath, and then bounce. Globex low is also magnet now. Bears maintain the gap at the EMA on hourly chart. We left it up there, and that's why if this line was above this target, so it was like maybe like this, okay, I would have not only expect this to be tested, also that to be tested before coming down. But when this projected line is generally an extreme, okay, is before the horizontal target, I take heavy profits, still leave a runner just in case, but that never happened. I ended up exiting here. It was nothing but sell for me from now on. And then the pullback is, you got a better look, is if you're smart about it and you heard me talk about it, is you measure this, right? This right here, only the body, right? Because it's a breakout bar and it's a very strong body. So if you actually measure just the body of bar 11, right, you would have a sell order here. You will have a sell order here. So you would get filled with bar 15 and then some again with bar 15 at the 66%. You would be swinging this down back to the close of bar 11. You would take some profit there. And then you would leave a runner to here, here, and here. That's a measured move target of this gap body. So we might come down a little bit more, but 17 didn't really close below it, so I don't know how far we're going to go. We might come down to here because it is the wedge trend line, and then reverse back up. That will give you, but if you're heavily taking profit, that actually gave you more than 10 points. So 10 points is good, but if you want more, then hold a runner into here. See if the market can get there. So I ended up selling and did much better there. That's where they're trying to go. But I think the buyers are somewhere down here. So Globex low, also magnet. So the market is trying to get there. If we break the Globex low, then we could come down a little bit more down here. But I took profit. That's a good entry. If you're stopped, I don't know, Sunny, you can hear me? You probably are not in the trade room, but he said that he put a stop above 11. He's also, I just noticed, he's not really in the BTC Discord. I'm looking at a different Discord. Never mind. I don't think he is in the trade room, but. So bears are trying to get follow through here. Good job, bears. But I took strong profit. So we're in a trading range highs. I is 000 basically is acted as a reversal pattern, which we talked about, and bulls failed, so you sell. What else? So we're about to make a wedge bottom here. Needs to overshoot a little bit. I would feel comfortable if the overshoot happens first with bar 18. Now, what about bar 18? Generally around bar 18, market likes to make a reversal, but what would be the reason, catalyst for a reversal here? There are two, the trend line, and there's gaps here, right? Bulls want to maintain the gap most likely. So, but that overshoot really didn't happen yet. So many bears are probably still holding. Anybody who has measured the first half hour, bar 6, okay, opening range, okay, they have a target. I do have a template for that. Opening range measured move target is right here. So you can see we can have an overshoot of the trend line and reach right there. So you should be holding your runner and hoping the market would give you a measured move target times 2 from this bar, 11, gap bar, or measured move target of the opening range, is 6-bar opening range, which is the same area as 505.50 or 505.75. $50.10 seems like where market is trying to go. but it should come down maybe a little bit more. I'd like to see an overshoot of this trend line. Could this be already a wedge? Possibly. 50-10 seems like a good place. We can actually tag that, would be great, but it's just struggling here, and the bulls are looking for a good buy signal. We have a micro double bottom with bar 18. Bar 18 likes to make a reversal. Since we sold with 3 legs, might be trying, but doesn't have to be exactly at bar 18. It could be a couple bars after also. It could be around bar 20, bar 22. So bar 18 is way too small for me to start buying. But we might reverse soon. And I'm wondering if this is going to be the micro double bottom, or we're just going to come down a little bit more before we reverse. Got an inside bar 19, bear bar. Market wants to test its low probably. Some bulls are piling above bar 19 with buy orders, but if we take out the 19 low, then those will be canceled. Here we go. Here we go. We took that out, so still looking for 10, but they seem to be really having a hard time here. Not going to buy until I see a strong bull close, saying that bears are trapped underneath 19. If I don't see that with bar 20 strong bull close, I'm not interested in buying. Bears making their way down to the possibly somewhere down here, but we need a good close, taking out an 18 low, bull bars low. There you go. Trend line. I'm going to use my original trend line and that overshoot that I've been looking for. I'm not ready to buy yet. Like I said, it's still making its way down. Globex low is magnet. We could break the Globex low and continue to come down to where I marked, which is, I'm going to mark 4. 5,000 is magnet. We could easily get to 5,000 as well. It's the round number that we've been talking about. So market is, I think, between 5,000 and 5,100. Eventually, we will go back up to the 5,100, but there's nothing to buy here yet. And here it is. We now have a much better wedge here. And we're so very close to the next target, which is opening range measured move. 6 bars breakout for bears. Right? So yeah. And another market even push towards here. Might be getting oversold, possibly. But then again, there's no such a thing oversold. Market is still making its way down. I'm just waiting. I'm quiet because I'm waiting. Bears are doing a great job. There's no need to buy anything. I'm still waiting for opening range measured move target to be tagged. So 505.50 or 505.70. I would say 505.75. 5,005 and 3/4. But it doesn't have to stop there. It could keep coming down. Because like I said, look, you have a double top here is failed breakout, double bottom here, failed breakout. Then it pulls back, right? Somewhere around 50% of the opening range. Then it starts to swing down. So what are you looking for? I'm generally looking for 2 bear bars. I put a sell stop order. That's the latest I'm going to enter with the stop there. So I'm looking for at least 1 hour, right? If I put my stop there, market could continue to come down. They don't have to stop here. But we are testing the trend line. And bears are not stupid. They're going to scalp there no matter what. Because some machines measure trend lines. Some machines look for 1 hour and 2 hours. Some machines look for patterns. Some machines look at opening range breakout targets. I mean, it's just right now for the confluence, market is still making its way down. And also on the higher time frame, somewhere around here, we should come down and test. What about a reversal? We can get the reversal, which I'm expecting. Can we actually form a inverse left shoulder head and a right shoulder, and then we go back and test this high, come back and go again? That would be a phenomenal reversal, but then again, we're now in a trading range on the hourly. Market might be looking to test yesterday's low before making any kind of reversal. So it's just happily selling. You should be selling. You should not be buying anything here. The stop order was underneath bar 17, like I said. The earliest stop, the safest stop placement is above 16, and then you should be looking for a 1 hour. 1 hour is 175-ish. So we did reach the opening range measured move target. It's a 1-tick failure, but the bar hasn't really closed to say it's a failure. There's still, this bar is young, there's still 4 minutes in this bar, so it's probably going to tag it, and then it might even move downwards a little bit more before bouncing. We have an overshoot of the wedge trend line. I am not going to buy unless I see strong bull bars. Otherwise, it's an overshoot. Overshoot can create bull bars and a reversal, but I need to see it set up before I attempt to buy anything. Yes, we reached the open. I've been saying that. So we reached. I know some of you guys are not in the trade room and still posting on the trade room channel on BTC. I assume everyone posting is part of the trade room since we have the channel dedicated to the members. So I answer everything. I'm probably talking to a bunch of people. They're not even in the trade room. All right, overshoot. Bulls need a bull bar. Bulls trying to break that double top there and trying to get an outside up bar to attract more buyers, but they have to take out the 21 high. It's profit taking and overshoot. We might need to get back up to the low of 12. And if we breach low of 12, I don't know if we're going to be able to get to the EMA just yet, but a pullback to 12 low, which is 50.14, might be what the bulls want, probably. Bulls need a bull bar. Without a bull bar, no one's going to buy. And they want a good signal bar. So it's better if it closes on its high. Even if it cannot take the 21 high, it's still a decent bar that could get us to the bar 12 low. Did I say 14 low? I meant to say 12 low. I was reading 50.14, so I just mixed it up. So 12 low is what I would like to see. Pull back only if we get a good, decent bull close. Well, that's a doji, and it's not an outside up bar. But it opened where the 21 closed, and it closed higher, so some will buy that. And looking for take out the 22 high is if the bulls take out the 22 high, more bulls will come in. We broke the Globex low, so that's problematic for bulls. So their base of buying is basically the trend line overshoot and a bull bar closing at its midpoint, but it's a doji, so it's really not clear. But if we take out the 22 high with a bull body, then many will enter as early as one tick above 22. So basically, bulls are looking for some kind of a backdoor to enter. So they might be trailing their buy stop orders above bars, and they're trying to get in as fast as possible above 22. I put a buy stop order above 22 just to test it out if I can get in. Delete this. Don't need it. Failure to get above with a bull bar. Bears can continue to come down. But bears moved the market about 20 points, so they're taking profit here. Bar 22 is the proof. So we might need to go up. We might need to go up to like 1375, 1650, 1625 area. Okay, I scalped some, and I left the runner. I entered above 22. I scalped a little, and I'm looking for, sorry, that's not it, I'm looking for, I scalp in the middle just in case, but I'm looking for follow through with one contract. So a bit more room to upside around 50-16, 50-25, 50-16 and a 2/4 or half. So that area is 21 ticks from above bar 22, which is 5 point plus 1 tick scalp, and that's what I'm going for. Let's scalp a little bit in case, because this is a breakout bar from the bar 12 low. I said we will test the bar 12 low, which we did. So I took some profit there, but I have a runner. And I want market to get to 50-60, 50-60 and a quarter or 2/4 area above. And if it doesn't go, I'm going to be forced to buy a little lower and fix the trade for this runner. Or if things get a little bit haywire and starts to moving down too quickly, I might actually exit or reverse and double or triple the contract size and make the losses that way. So looking for a 21 tick here for the runner, maybe more even, but I'm not picky because it's midday is rolling in. I want to take some questions, and I did phenomenal with this so far. Don't want to give back so much. Tomorrow is another day. Did anybody buy above 22 with me? That's great. My runner is doing fantastic. I don't care about this anymore. So that's 1.5 R somewhere here. I'm looking for bulls to go higher. So the swing I did, Dragos, I can't say it right. I'm going to call you Drago. How's that? So, so basically buying with a stop order above 22 was basically a good buy, but for sellers, selling under 17 yielded well, but you're kind of selling into, several legs down already, so you're limited. You needed to take profit right here. So now bulls take over. You know, if you haven't exited, you really needed to exit it above 23. You could have bought that, would still give you some good scalp at least, but then you're swinging further up. But there are probably sellers above, so be careful there. If we can take out 50, 21.75, there will be some profit taken. We will come down. But if we then take out the 21.75, market will continue to go higher. But it's kind of a dangerous because that'll be the 2R. So I did take profit. I do have a runner, but I need bulls to do better here. Bulls could be looking for a bull flag, okay, and inverse head and shoulders, okay. So here's the left shoulder, here is the head, and here is the right shoulder. And I talked about it on the 60-minute charts. So we could go back and test this double top area. Okay, and the bulls see a bull flag. Think of this as a one big bull bar. So you have a wedge bull flag situation. Bulls want to go higher. But you're right at the breakout test area from now bar 3 low. So probably sellers there. Bar 17 is a breakout bar. Quick pullback and follow through, so you know sellers there. So it was a good idea taking some profit at the 21 tick. Now we kind of overshot the 21 tick because I believe at that time the ATR was a little bit higher. It doesn't mean that it's not going to go to the 2R. It's really good by the close bars. All we need is another bull bar closing. We will get there very quickly. We might even get to here, but 2R is a good scalp. So you should definitely paying yourself if we get there. Can this area act as resistance? Yes, it might. We're coming right back to that trend line once again. We sold above it, came down. Bulls want to break it and reach these moving averages, but I don't know. They might. It's a really good outside up bar on the after a wedge. We might need to come down and make a higher low for trend reversal. So we need to form some kind of a higher low for bulls. So the pullback is probably important, but what if the bulls actually close this bar 25 above the 21 tick? Then we expect more from bulls, right? So 21.75 would be the target. That's what the runner is for. Bit of a resistance here. Bar 25 did not close above 21 tick, and that's a problem. But 4 bull bars, they're all by the close and closed higher. Even bar 25 is by the close and closed higher than the close of 24. So it's a good follow through. It's just that they didn't close above 21 tick. So if you start to see a bear bar, you can certainly exit out, otherwise hold it. But it doesn't make me happy to see bar 24 and 25 fail to close that bull body. The question is on September 13, 2023. This is going back to dinosaurs. I don't know. I don't remember what I ate a couple of days ago or what I said 2 days ago. But I think you're asking about 10-point swings, how to get them, right? So I assume. So I'm going to read the question. Maybe somebody remembers this. In the September 13, 2023 live trading room, you talked about your technique where you drove lines 10 points apart with a white +1, -1 point mid-range between to take profits. I'm butchering this question, but hope you know what I'm referring to. I do. Can you explain this again and how you determine where you draw 10-point lines. So what this person is asking is how to get 10-point swings. How do you measure? How do you enter? How do you take profit? How do you look for follow-through continuation? How do you look for reversal? And how to measure for the opposite side. So the person is not really asking all of that, but that's what should be asked. Okay, but I'm going to try to explain all of that. But anyway, so this is still target right here. All right, so let me clean all of this so you know what I'm talking about. Market, okay. So basically, when I'm measuring, there are two ways to measure, okay? The Al Brooks way of measuring is buying above a reasonable signal bar, and you measure from there. You measure, it used to be, look, back in the day when Al was doing these course videos, okay, back in the day, there was no volatility in the market. I mean, there was, but if it, when there was volatility, market gets to, 1 point or 3 point on the ATR, right? That's a big deal. Oh my God, S&P is moving 3 points. Everybody load up, and we're gonna make a lot of money. Those days are over. We now have a lot more volatility in the market. And I mean, 1 point, I remember when this volatility started to set in, we were getting like 20 to 40.1 single bars. I'll remember that day I made with micros, only traded for an hour and made like nearly $5,000. I just couldn't believe it. It was insane. No matter what you do, you would not lose a trade. But that was a sign right before the, we didn't know anything. I mean, people who had access to Illuminati, right? So you get a friend in Illuminati, they will tell you, hey, pandemic is coming, so that volatility you're seeing, that's what's happening. We don't have those friends, so we don't know. So that was right before the pandemic. I'm just joking about it, but that's what it is. And when it was through a pandemic, things started to scream on, in the market that these are not normal times, something is about to happen, and that ended up being the pandemic. So other than that, it was a Trump's time, and Trump and China fights going on. Like every day was a major volatility day. So, I mean, I used to work for another company, and there were like a bunch of people I used to trade with. We would just throw our hands up and say, oh my God, I can't trade this. There was this one guy who I really liked so much, Carlos, and he was a really good trader. And he one time said, I can't deal with this. This is too much volatility. I cannot deal with this. I can't even think. I'm just not going to do this anymore. Every day something's happening. I can't do it. But right around that time, those 1 point take profit, S&P's 1 point profit, traders profit, has become the days from, long time ago. Nobody expects to make a 1 point and walk away from the market anymore. So everybody's now, that 1 point became 2 points, okay? So if market is moving 2 points in the direction and then getting to a 5 point, hence 2 points is 9 tick, 5 points is 21 tick. And Al used to look for those failures by buying or selling below, buying above and selling below signal bars. Then he would count. Now, the way that I count is I have to anchor somewhere, and the best way to do it is the pivot levels, okay? So what I do is I measure, like here's a pivot level and a really good. So L will start the count from here, and he's going to look for a 525, okay? That's it. And he'll probably going to take profit there. I will measure from here, and I look for a 525. But I don't look for a 525. I look for a 6 point plus, which is 625, okay? I see bulls are actually closing at 6 and above. I'm buying, and I'm going to hold it into 10 point minimum, right? Especially if ATR is strong, I'm not going to look for a 9 point scalp. I'm going to look for a 10 point scalp. But generally, it's from 9 point to 11 point. Somewhere in between, I mark the 10 because it's a good place average. I'm going to take profit there. After that, if we're closing a couple of ticks above 11 points, say a couple of ticks is like 50 or 3 ticks like 75, 11.75. We got a bull bar. You can even buy the pullback. Most likely, we're either going to go to the 15 point, okay, or we're going to go to the 20 point, right? It's 15-point swing. And I have heard L said that you look for a 10-point swing, 15-point swing. Why does he look for a 15? Because that's extra 5-point scalp on top of 10-point. How do you get to 20-point swing? You have to first to see in the same direction bulls are scalping and able to close bull bars above that additional 5-point to get to the 20-point. Do you see those bull bars? No. What is happening? They're done. They have extended their 10-point swing into 15-point. I take profit around 14 because that gives me a good average price to take early profit and exit before everybody else is scrambling. So I get out as a winner and I watch they duke it out, right? Because nobody wants to exit out with a bear bar closed, right? So you take profit. I take profit around 14, so 1 point below 15. I don't need that 1 point. I already made money here. But now that the bulls cannot close beyond 15 point, what does that mean? That means they're not going to go to the 20-point swing. This is it. We're in some kind of a trading range. Bears made some money and bulls are trying to make money. Even if I measure from bears, look, here's my pivot. I'm looking for a 625. Market actually closed the bear body, so I'm looking for a 10-point minimum. Is market go from 9 to 11, but I'm going to take profit at 10. How do I expect follow through? They needed to close a bear body, maybe this bar or the next bar, below somewhere here average. Do you see a bear bar? No. Do you expect market to go down? No. They closed the bull bar. You should be counting for bulls now. Now, people think that, and there were people complaining, say that, oh, she just counts 5-point incrementals. Heck yeah, I do, because that's how S&P moves, and that's how L also counts. So if it's good for L Brooks, it's good for me. So I don't care. People complain about my 5-point increments, but I'm easy to take profit. I'm easy to swing. I'm easy to take profit or scalp, whatever market gives me. Whatever market doesn't want to give me, it's going to show me. This is why I count. Very important. Because we're in times now, this is now average move. Market is in volatile times that the average move is around 3 points. So the average bar size is 3 points minimum or double the ATR. So that could be 6 points. So I'm going to measure just the body. That's a 6, right? Here, this one is a lot more than 6. See what I mean? So hopefully that explains the question, the question you had. Anyway, so the next question, what's the minimum size of scalp so far? I think I answered this. Yeah, so that's 9 ticks. So it's 8 ticks plus 1 for you to get filled. So that's 9 ticks. So that's 2 points plus 25. How does scalper take profit? That's a loaded question. But I'm going to try to answer. It used to take profit. It used to take profit 1, 2, 3, 4 points if go along. I think I answered this, Frank. No, I mean I kind of went into detail, so hopefully you can reference that. But so let's talk about it, right? So you got a good buy signal bar. You put you enter 1 tick above bar 3, so you enter 25.50, right? So 25.50 ATR at that time ATR was around 875. Half the ATR is 425, right? So 25 add 4, 29, right? 29.25. So you should be taking profit around 29.25. That's half the ATR and leave a runner. So add another 4, that would be 33.25. And that you should be taking profit there. 1 time the ATR at that time. And then if you didn't take profit, say you're not counting any points, you're just going by the ATR, or say you don't use ATR, then you're going to be forced to measure the size of these bars to make a assessment what's the average move of any bar. You can do that too. I just don't have time. I'm a very lazy person when it comes to trading. If there's a tool, I'm going to use it, and that's that tool. So I use each tick. I don't use bar close. I use each tick, and I look back 4 bars to determine whether I should swing or scalp. So if you didn't take profit, you have to exit out from underneath a strong bear bar. Okay. Bar 8 is not all that strong, but did close below its midpoint on its lower third, so that makes it a strong. It's not strong because it's got an upper wick mile long and a lower wick mile long, so that puts us into a trading range, right? You only have 2 bar types. You either have a trend bar or you have a doji or a trading range bar. Trading range bar, I utilize the upper third for sellers, lower third for buyers. So this is a trading range bar. That is a trading range bar. This is a trend bar. Trend bar, I can buy 1 tick above, okay, and expect follow through. If it pulls back, then I will definitely buy at its 50% level to fix it, right? Trading range bar 8, there were sellers aboard. Here, let me show you the trick how I would trade at that. But I was long, so I had to ended up buying down here to fix it and exit out. I couldn't really exit out with my 1 contract, so I exited with 9. But if you see a bar like this, okay, and say I was flat and I'm looking for an entry, you can use this, right? So that's, you divide the bar into 3 sections. That's the trend trading range bar. I'm talking about, hold on, it's just interfering. I'm talking about bar 8, okay? So I'm looking for sellers at the boundary line or here or here. So I'm going to lace this area with sell orders. These you cancel out, you entered, and then you sell, right? You're targeting the low of the trading range. Look, they came to the low of the trading range, they bounced, but now we have a break. So what do? You could do this, right? So now you have a continuation before bouncing. Or you can simply measured move target and go for that by just selling with a limit order right there. Okay. So basically you can use the ATR to your advantage, right? So here's a stop order. This is a trend bar. Here's a stop order. You sell underneath this, that's going to come down, right? So what was the ATR at that time? ATR at that time was 6 points. So if you actually sold underneath 1 tick underneath 17, you would get filled 12.25, right? So that like 6.25. 6.25 is where you would take profit. It went 1 tick below to fill everybody. That's with the ATR. Anyway, next question. Rose, what's your recommendation to not enter when climax is forming or 5 or 10-point bar? Can you give me an example? You mean like this climax? Market is always in short here, right? So we moved underneath, we closed another bar. We have 2 closes, but not 2 bear closes. So even though the bar 13 closed below the EMA, that doesn't mean that we are always in short. But this makes it always in short. It's just that we have a trading range, and this is the first breakout of the trading range for a climactic bar. We're probably going to get back into the trading range. And if we test the trading range midpoint or 25%, and then just close another bear bar, which bar would be a good signal bar? Carlos. If we go back into the trading range and then test it and then close a good signal bar. Which signal bar would be a good bear signal bar to sell under? No, I'm talking about here. It would be bar 16, right? So here is your trading range low. I'm going to take these. I'm going to exclude the wicks, right? You here tested the trading range low. So that right there is a signal bar, but it's a bad signal bar. No one's going to want to sell bar 15. Then bar 16 happens, you can put underneath. Or if you actually measure this edge to edge as your trading range, look, we went up, right? So this is the 66%, this is the 33%, right? Here, if you don't see it, I'll give you. Where did the market go up and test? This, if you take the edge to edge, right? After the breakout is weak, goes right back. Limit sellers will be there. Stop sellers enter here. When the limit and the stop sellers enter together, that creates a swing. You should look for one or two legs down. Here's your leg one, pull back leg two, before you look for any kind of reversal. So if you see a bar like this, another way to enter is that I like to measure breakout or big climactic bars bodies. And I look for, if it's a bear body, I look for a pullback into 50%, 66, maybe even here. So I enter here, enter here, enter here. As it comes down, I'm down with 2 contracts. I will take 3 contracts. I will take 2 here and then leave a runner to go down. Like here, you got a trading range here and you got a breakout bar. This is not a breakout bar, but this is a breakout bar. How would I enter with that? With the limit orders, I will enter, I will put a buy order here, buy order here, buy order here, but look what happened. 25, it's buy to close and close. Remember I said when these bars were happening, this is buy to close, so you can actually enter. You enter with a stop order, right? So if you actually apply the breakout, look where we just reached. It's the measured move of the breakout. Measured move, I'm sorry, that's not measured move. Measured move is here. We now close the above measured move, so now we're going up to here. We even got here. We should get this. We might even go up here, but this would be your target. We just tested. NQ is a little bit different. It's not as clean as S&P because it moves so fast, and it's just not very. It's very volatile, so I have a range. So for NQ, I look for, so basically that 6 point I talked about on S&P is 20 to 30 points. I see market is moving one direction, 20 to 30 points. I then look for 40 to 50 points, which is 10 points equivalent to S&P. Now, if I want a swing to continue beyond 10, then I'm looking for, if there are more, say, bull bars are closing and I'm long, then I look for 60 to 80 point zone tested. I take profit there. If they close beyond 80 point, more bull bars, I hold a runner into 100 to 120 point, and the biggest swing, which is 40 point equivalent on ES, on S&P is 200 points. Okay, so this was the swing. Market is trying to reach probably 50.26 3/4 or 50.27 area above. If they break above it, they will reach further high. Maybe, I don't know, maybe open of the day tick price. And they can, if they get above the open of the day tick price, your magnet is up here. That'll be the target. So I'm going to take a look at some things here. So we have a midday reversal after making a wedge bottom, right? And we're doing pretty good. Buy to close bull bars. Look, it's very similar, right? And here's a leg 1, pullback. We're on the leg 2. We're going to get a pullback, but the leg 3 may create a trading range, and it may not go too far. So that trading rate, we could test that with that third leg and then come down. Okay. But here's what happened. So you have, look, market makes a wedge bottom, reverses back up. Look, here's the first inverse cup. Here's another one. They go and test that high, but they cannot get a follow-through buying because this high is blocking. So now you have a much bigger inverse cup. Where's that going to go? If bears start to sell, it's going to come down and test this low. Remember what I said on the pre-market, what to look for? Market structure. Anybody who sold will take profit there and they will look for a follow-through. Problem here is that reversal. This whole area extended is a buy zone. So you can count points and determine when it's reversing back up. Buyers are heavily waiting here. Okay, so we could get this today, by the way. What about the bulls? Can we get this? We moved underneath, but we moved underneath a little bit more stronger. The bulls showed up. If we start to take out the prior highs, expect a measured move target up or some kind of a magnet test. Now, those magnets are, if we take out this high, by the time we take that out, so we're going to be getting above the open of the day tick price. That means 1 hour EMA, and slightly above 1 hour EMA is Friday's open. So somewhere between the Friday's open and the 1 hour EMA, we might test before coming down. And then they could buy again, perhaps. Or we're going to reverse back sometime around bar 48 and 50, which is 1:30 p.m. Eastern time. So we might go up, and then sometime around 1:30 p.m. we could start to come back down. That will put us into the trading range once again. Around 1:30 p.m. we could start to come back down. That will put us into the trading range once again. Trying to find So here's what I want to talk about. 4 common outcomes. So here's the first page, right? Bears were still selling, but they they didn't do this. So we ended up reversing. So they want to get back up to these highs, right? So anybody bought above 3, stuck. Maybe they bought above 4, stuck. They bought lower. They might have bought this bar, which is a fantastic bar, right? Is anybody here? They bought that bar. That's their, look, they closed the bull bar above the 80% probability of finding a midpoint. Now, 60% probability of finding, getting back to where they actually got stuck is 1 tick above bar 4, and they could get there, but I don't know. It's a trading range trading at the moment. So let's take a look at, for example, here. You see, this one found buyers right underneath the EMA without any, okay, gapping down. We gapped down here, and we were always in short, okay? But we also made a wedge, and this is kind of a bull flag. Bulls want to test the highs, take a profit, maybe come down, and then break out. So what does that mean? These guys already had the breakout, tested above, and then came down. We came down with another leg or so underneath the EMA. So what does that mean? That means we may not actually make a new high, and we might actually find sellers here, right, and then come back to the midpoint right here. That's what I'm worried about. Can the bulls, we are in a bull trend. We are in a bull trend. That bull trend actually turned into a very climactic trend, right? So we could come back to EMA and find buyers. Then I would look for these small bull flags. Then I would expect the top of the trading range tested before coming back down again. That would be bar, I think, 60. So that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. No, that's like 66, 65, 66, bar 65, 66. 66, 65, 66, bar 65, 66. but we're clearly in a trading range at the moment, and we should come down a little bit to the EMA, Gonna try to find some similar, well, here's what could happen. Think of this as a bull flag, right? Comes down. This one had, well, you're not seeing this, okay? But this one comes down with several legs down, then reverses back up. This is really painful reverse, and then they fail at the high, and then starts to go sideways rest of the day. I don't think we're going to do this. I think we're a lot more bullish than this chart is. So, let me see if I can. This is now a very strong leg up, but probably market is trying to get back to here again. So this area is probably target. So this area is probably target. We have gapped up from the EMA. So if you buy here at the high, I'm afraid they can move it down and look for buyers at the EMA. This is where I would pay myself and then look for a pullback. It's an inverse head and shoulders, left head and a right inverse shoulder, and market is looking for a head and a right inverse shoulder, and market is looking for measured move target to the upside, so they can keep pushing this. If I see a bear bar, I would pay myself. Now, we don't have a small pullback bull trend like we have, but in between, it's climactic, some small bars, but big bars. So it's kind of similar, although I stretched the chart a lot, so it doesn't look like a small pullback bull trend. It really is a good look. There's only one bear bar among 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 bull bars and a 1 bear bar, okay? So we are still bullish, and the market actually made a new high before coming down. So we could continue to go higher, and that's the measured move target, which is right around the magnet, but eventually we will come back to the EMA once again. So the market is trying to get back in here. How do you recommend to manage a swing and take profit if you only had one contract? Would you hold on till opposite signal, or would you aim for targets? Well, if you have one contract, you're only swinging, you're not scalping, or you're scalping and you're, exiting out of the trades. You can't really do that, right? Both. So if you're swing trading and you see market is going, I told you maybe you can go for a 10 points and take profits, look for a pullback. If the counting yielding bull bars closing above 11.1150, then you can enter again and go for another 5 points, go for another 10 point, or whatever, however you're counting. So you would be swing trading with that. Now, if you enter with 2 contracts, then you can take profit at the 10 point, wait for a pullback, and the bull bars closing, add another contract, you're back in with the two contracts. You scalp again somewhere around 15 to 20 point, you leave a runner, pullback. If the pullback is really stacking up bear bars, you can exit out, close the trade. But, prior highs are target, you can hold it into prior highs. You can look for measured moves. So, it's all determining how strong the swing is. Is it getting follow through? Like here, it's getting follow through. There's no need to exit. You would take profit and you would leave a runner. And if you have a measured move target, you would perhaps hold it into it. You can also go for 1R, 2R, right? So you have a breakout here. Say you bought, stop goes here. That's 1R, 2R. 3R, we haven't really get to the 3R. Right, so. Oh no, we did get to the 3R. I just didn't measure it right. So here's your 3R. And they're taking profit. This doesn't mean the market does not go to the 4R or 5R. It could easily go to the 4R. Prior highs are right here. So the market is probably wanting to get to the 4R, which is this line. So you can hold it. But I would start to get antsy or nervous because we've gapped up from the EMA so much. You're going to have to think of moving your stop, right? So stop definitely has to be way above. I will put it underneath here. And if it pulls back, I might even buy once again, looking for a third leg up. Okay, so we have an outside bar and an inside bar. It's micro wedge top 31, 32, and 33. We have leg 1, pullback leg 2. Maybe we're already in the leg 3, but the leg 3 didn't really go above 31. I would be hesitating to exit out of this unless bar 33 closes bearish. But even then, buyers will show up somewhere under 31, maybe even under 32. So we now are in the third leg because 33 went above 32. If 33 closes very bearish, that's a limit sell because we tested one tick above that bear bar. All bears need another bear bar closing. They will sell and try to swing with a couple of legs down, okay, closer to some kind of a bear bars highs or EMA. But if we close a bull bar, there's no need to exit out of this. It will try to go higher. The question here is that can you review the pullback bar 11? Pullback. Can you review the pullback with bar 11 entry? Did you just measure the breakout bar and look for it? That's exactly what I did, and that's what I was showing earlier, right? And bears are getting a imbalance here. All right, imbalance means gap. And gap bars are ATR bars. They generally have large ATR value. So I only measure the body, not the wicks, just to be accurate. Okay, so here we go. Let me get that out of the way. Just pay attention to this. Okay, so I measured that. I'm looking for a pullback. So there is a gap here. You can also measure the gap, right, from there to there, right, from that high to that low, the empty space. And here's a pullback. There's no bull bar closing above 66 for me to buy and put the stop here and go for a 1R or 2R. Bulls are not able to go. So that means I'm looking for a bear bar. You can sell as early as here, put the stop there. That's your 1R, that's your 2R. You could do that. Or you don't even have to put the stop there. You could just put the stop right above the gap. That's your 1R, that's your 2R, and that's your 3R. See that? So, or if you, here, that's your 3R, and we just reached the 3R. If you don't want to use it, which we use this instead, you're measuring the 1/3 breakout of where you sold with the limit order. That was the target. Look, right? First you come to the close of 11. Now we have a breakout. So you can even measure this if you want, but we kept this as our base and we kept looking for targets. when I'm using this, I always have a runner into the round numbers, but 166, 66, 266 is where I scalp very heavily because it tends to turn and reverse around those numbers. Okay, because that's 2 1/4 increments. Anyway, so let's get back. What did I measure? Oh, I measured this. So 1, 2, 3, it's going to the 4R. So you should be holding. See, bar 33 did not close bearish. In fact, bulls actually bought the close of a bear bar. So this is a very climactic small pullback bull trend within the range. And it's going, but I don't like the angle. Angle is way too steep. I like it to go like this. Small pullback bull. This one's just very climactic. So we will get a reversal. That could be 2 legs and 3 legs, but nothing here that is screaming at you that you should exit out of your long. So let it rip. Let's get it to the 4R, and the 5R is right around the magnet. So on the hourly, I did say this is, remember what I said? If anybody just joined and missed what I said, you can go back and rewatch. I said on the hourly, we are going to reverse. This is an inverse head and shoulders, right? If we don't close the bear bars, that's it. The gap is kept open. So now bulls are going to go and test that high and the EMA I set. And that's what we're doing. All right, I am done with my session, everyone. Tomorrow, I don't think I'm on tomorrow. I think it's, let me see. Tomorrow is Al Brooks and Brad Wolf. And on Wednesday, I come back and then I'm off the rest of the week. And I'll see you guys on the 29th. Okay? So you all have a great day. You should be in a swing. But we're getting to the high of the trading range, except we have a little bit more to the upside. I don't think you need to worry about this micro double top. I think the market is trying to reach maybe even this high or this high. I would hold it, and I would look for market to get to the 1 hour EMA. Sometimes this location of this line and that line doesn't really add up well. Look, we reached the EMA here, and we haven't reached it. That's because this is a code. I don't know how accurate is that code. I just downloaded from the BPA website, and I don't know who maintains it. I'm just using it. It's just you don't have to use this. Just keep an eye on the hourly chart. And on the Globex chart, this trend line is target, and my bull targets are stacked up here. Okay. All right, so we reached the 4R. Good job. You could have also measured this right here. Then that would be your measured move. Or you could have measured that leg, and that would be your measured move. So if you measure this and the bull's got above, I don't like doing that. I like to measure a good bull leg, and then this is your measured move. So look how close we've gotten to that measured move, but we have not really tagged it. So I think the bulls will, this is your measured move. So look how close we've gotten to that measured move, but we have not really tagged it. So I think the bulls will push this a little bit more. Yeah. All right. Have a great day, everybody, and see you guys Wednesday.